Today, we're diving into one of the most incredible corporate comeback stories I've seen in a long time: how Google fought its way to a mind-boggling $4 trillion valuation. It's almost hard to remember now, but just a couple of years ago, this was the big question on everyone's mind. Was Google's time up? I mean, this is the company that basically was the internet for so many of us, and suddenly it looked like they were completely asleep at the wheel while the whole generative AI thing just exploded. And the story everyone was telling was pretty simple. Google had gotten slow. They were this big, sleepy giant getting run over by scrappy rivals like OpenAI and Microsoft. The thinking was its entire search business, the goose that lays the golden eggs, was suddenly on the chopping block. For the first time, people were seriously wondering if Google could even survive. But then, you fast forward to 2026, and that whole story, it got completely shredded. Google wasn't just hanging on, it was back on top, bigger and stronger than ever. So let's break down exactly how they managed to pull off such an insane turnaround. Okay, so first things first, we have to talk about the massive problem Google was facing. It's that classic innovator's dilemma, right? Do you take a huge risk and potentially blow up your own incredibly profitable business, or do you just sit back and let somebody else do it for you? This was a real make or break moment for them. And this whole turnaround happened so fast, it left Wall Street's head spinning. I mean, check out this quote from a research report in early 2026. It says, "The old narrative was systematically dismantled by a year of flawless execution." You don't hear words like flawless thrown around very often. So you can really see the massive swing here. The perception in 2024 was, they're in trouble, a vulnerable giant losing its edge. But by 2026, the reality was, they're a structural hegemon, basically a powerhouse that's built to dominate the AI age. It was a complete 180-degree flip.
So the big question is, how did they actually do it? Well, it wasn't some lucky break or a single magic trick. It was a very carefully planned three-part strategy that just completely turned the tables on everyone. And these are the three pillars that brought the whole empire roaring back. First, they went for what's called vertical AI sovereignty. Basically, total control of their AI tech from the ground up. Second, they took Google Cloud, which was bleeding money, and turned it into a profit-making beast. And third, they finally unleashed their ace in the hole, Waymo. Let's dig into each of these.
Everything really started with the tech itself. In this new AI arms race, Google knew it couldn't just buy its weapons from someone else. No, it had to own the entire arsenal, from the tiny silicon chips all the way up to the massive AI brains that run on them. And that brings us to this key idea: vertical AI sovereignty. It sounds complicated, but it's actually pretty straightforward. It just means Google controls its own destiny. They control the entire AI production line, from start to finish, so they aren't dependent on anyone for the really important stuff. And here's where you see the huge difference in approach. Look at their competitors. They're all buying chips from Nvidia. They're relying on partners like OpenAI for their models. But Google, they're doing it all in-house. They design their own custom chips, the TPUs, and build their own AI models, like Gemini. That gives them this incredible edge in both how much it costs and how well it performs. And let's talk about the hardware for a sec. Google's custom Ironwood chip is an absolute beast. We're not just talking about being as good as Nvidia's top-of-the-line stuff. It's actually better in some really important ways. It scales bigger. We're talking pods with over 50,000 chips, and it's more power efficient. And trust me, when you're running data centers this big, power efficiency is a massive, massive deal for your bottom line. So what's the result of all this? By making its own chips, Google completely sidesteps what Wall Street calls the Nvidia tax. Think about that. Their competitors are paying these massive 70 to 80% margins just to get their hands on GPUs. Google pays, well, just the cost to make them. That's a built-in cost advantage that is just brutal for the competition. And then there's the AI model running on that custom hardware, Gemini 3 Pro. This thing was a game changer. It beat out GPT-5 on factuality, which, if you're Google, is pretty much the most important thing. It's a killer at writing code. It offers this huge context window for big companies. And this was the real knockout punch. It landed a deal to power advanced features for Apple. That's a massive distribution win. Okay, so Google clearly won the tech battle. But the big question is, did it make them any money?
This is where the story gets really interesting because we see this shift from just having cool tech to having serious financial firepower. We're talking about turning businesses that were losing money hand over fist into absolute cash machines.
Just look at the cloud market. The numbers were absolutely jaw-dropping. In the third quarter of 2025, Google Cloud's revenue shot up 34%. That's not just good, that's way faster than both Microsoft and Amazon. They weren't just growing, they were stealing business from the big guys. But honestly, the growth isn't even the most impressive part. It's the profit. For years, everybody knew Google Cloud was this distant number 3, just burning through cash. But by that same quarter, it had an operating margin of almost 24%. That's not a fluke. That's the sign of a business that has fundamentally changed into a high-profit engine. And then we get to the secret weapon, the ace in the hole. For more than a decade, everyone just thought of Waymo as Google's cool but ridiculously expensive science project. Well, in 2025, the science project finally grew up, and people started realizing this could be a trillion-dollar business all on its own. And you can see the proof right on the streets. Waymo isn't just a weird little experiment in Phoenix and San Francisco anymore. No, it's a real business, offering driverless rides in a whole bunch of new cities. We're talking Miami, Dallas, Houston, Orlando. The technology is not just working, it's scaling up, and fast. And Wall Street is definitely starting to pay attention. Analysts are saying that if Waymo were its own company, it could be worth over $100 billion. Imagine that. Spinning it off could just unlock this enormous amount of value for shareholders that's kind of been buried inside the bigger Alphabet company. So let's recap. You've got total dominance in AI, a cloud business that's on fire, and a self-driving car company that's about to take off. So what was the verdict from the ultimate judge of all this, the stock market? Well, the verdict came in the form of one giant number. By early 2026, Alphabet's market value soared past $4 trillion. And this wasn't just some speculative bubble. This was the market saying, wow, Google just went through the fight of its life and came out the other side even more powerful than before. But maybe the biggest vote of confidence, the ultimate seal of approval, came from the last person you'd expect, Warren Buffett. His company, Berkshire Hathaway, which famously avoids flashy tech stocks, went out and bought almost $5 billion of Alphabet stock. When Buffett buys in, it means he doesn't see risk anymore. He sees a long-lasting, money-making machine. So there you have it. The comeback is complete. Google earned itself a new title, the Sovereign of Intelligence. They own the whole stack, the chips, the AI, the data. The only question left is the big one. Now that they've built this new kingdom, can they defend it? That's the chapter we're all waiting to see.